Hey guys, this is Vyom Joshi with Superior North. Welcome back to my channel. Today we will be talking about Verizon Communications Inc. In this video, we'll review the company's fundamentals and try to find the intrinsic value of this company. So let's dive in and review Verizon.
Hey guys, I'm on QuickFS looking at Verizon Communications Inc., focusing on the business description. Verizon Communications Inc., through its subsidiaries, provides communication, technology, information, and entertainment products and services to consumers, businesses, and government entities worldwide. It operates in two segments, the Verizon Consumer Group, Consumer, and Verizon Business Group, Business. The 2022 revenue breakdown shows that the Consumer Group brought in about 76% of the company's revenue, and the Business Group brought in about 23% of the company's revenue. Next, focusing on the key statistics, the company's price to earnings is at 6.7. This implies an earnings yield of close to 15%. The price to book is at 1.5 times. Price to sales is at 1.1. The company's 10-year median return on equity is 30.1%. Having a substantially high return on equity is fairly common in the telecom sector because the companies are leveraged. So the company's equity portion is tiny to begin with, which is how it's able to report high return on equity numbers. Next, looking at the company's revenue. Revenue is the amount of money that the company brings in via sales. Back in 2013, the company brought in about $121 billion. And for the year 2022, it was about $137 billion. Over the past 10 years, the company's revenue has been trending up, with a couple of declining years back in 2016 and 2020. Next is the gross profit. The gross profit is what we get when we subtract the company's cost of goods from its revenue. Back in 2013, the company's gross profit was about $76 billion, and for the year 2022, it's about $78 billion. For the past 10 years, the company's gross profit, similar to the company's revenue, has been trending up. Next, focusing on the operating profit. The operating profit is what we get when we subtract the cost of goods and operating expenses from the company's revenue. Back in 2013, the company's operating profit was about $32 billion, and for the year 2022, it was about $30 billion. Over the past 10 years, the company's operating profit has been positive. It's interesting to note that even though the company's revenue has been trending up over the past 10 years, the company's operating profit has not been trending up with it. This goes to show that majority of the increases the company has had in its revenue have been eaten up by its costs. Next is the operating margin. The operating margin is the ratio of the company's operating profit to its revenue. So it gives an idea of how much money is left over with the company once it pays for its cost of goods and operating expenses. Back in 2013, the company's operating margin was 26.5%, and for the year 2022, it was 22.3%. What this means is every $100 that the company made in 2022, by the time it paid for its cost of goods and operating expenses, it had $22.3 left. Next is the earnings per share. Back in 2013, the company's earnings per share was about $4 per share, and for the year 2022, it's about $5 per share. Next is the dividends per share. Back in 2013, the company paid out $2.09 per share as dividend, and for the year 2022, it paid out $2.59 per share as dividend. Over the past 10 years, we can see that Verizon has not only paid out consistent dividends, but it has hiked its dividends every year for the past 10 years. Next is the company's return on equity. This is a ratio of the company's net income to its shareholders' equity. Back in 2013, the company's return on equity was about 12.7%, and for the year 2022, it's about 24.2%. As I said before, the company's return on equity numbers are inflated because of the capital structure of telecom companies, which have a lot of liabilities on its balance sheet. Next is the return on invested capital. This number gives an idea of how good the management is at allocating the company's capital and getting a return on that investment. Back in 2013, the company's return on invested capital was 5.3%, and for the year 2022, it's 8.1%. Verizon's weighted average cost of capital, also known as the company's hurdle rate, is about 6.0%. And since the company's return on invested capital is greater than its weighted average cost of capital, we can safely say that the management is creating value for its shareholders. Now let's look at some other key ratios. Let's look at the company's capital structure. The first item on the list is the asset to equity ratio. As the name suggests, this ratio compares the company's total assets to its shareholders' equity. A high asset to equity ratio tells us that more of the company's assets are financed via liabilities. Back in 2013, the company's asset to equity was at 2.9 times, and for the year 2022, it's at 4.1 times. The company's asset to equity got to a high of 17 times back in 2014. However, ever since then, we can see that the company's asset to equity ratio has been trending downwards. Next is the debt to equity ratio. This ratio compares the company's total debt to its shareholders' equity. Ideally, we want the company's debt to equity ratio to be 1.0 or less. Back in 2013, the company's debt to equity ratio was at 1.0. It got to a high of 8.3 back in 2014, and then it has been trending down to a low of about 1.9 in 2022. I wanted to quickly compare Verizon's capital structure to those of its competitors, AT&T and T-Mobile. AT&T's asset to equity was at 3.8, and its debt to equity was at 1.5 in 2022. T-Mobile's asset to equity was at 3.0, and debt to equity was at 1.5 in 2022. So we can see that all three competitors have fairly similar capital structure. However, Verizon is certainly the most leveraged out of the three. Now let's try to find the intrinsic value of Verizon. Focusing on the company's free cash flow. The free cash flow is what we get when we subtract the company's capital expenses from the company's operating cash flow. Back in 2013, the company's free cash flow was at $21.6 billion. And for the year 2022, it's at $10.4 billion. Now, if you use the no-growth perpetuity model and use a 10% discount rate, which is 6% weighted average cost of capital plus 4% of my margin of safety, then that would imply an intrinsic value of $104 billion. The company's current market cap is $146 billion. So this goes to show that if we use the company's 2022 free cash flow and expect that the $10.4 billion is what the company's free cash flow will be every year from now into perpetuity, that the company's intrinsic value would come out to be about $104 billion. Now, if you think that the 10% discount rate is too high and want to use 6%, which is the company's weighted average cost of capital, as a discount rate, then the company's intrinsic value would come to about $176 billion. And in this case, the company's intrinsic value is certainly higher than the company's market cap, implying that Verizon's stock price is undervalued. Lastly, let's look at the company's shares outstanding numbers. Back in 2013, the company had 2.8 billion shares outstanding, and today the company has 4.2 billion shares outstanding. This goes to show that Verizon has been diluting the existing shareholders, and this is fairly common in the telecom sector, as we can see that AT&T has also diluted its shares from 5.3 billion back in 2013 to 7.6 billion in 2022, and T-Mobile has diluted its shares from 677 million in 2013 to 1.3 billion in 2022. So Verizon diluting its shares is not uncommon, as this is one of the ways that the management uses to finance its future growth. Lastly, let's look at Dataroma to see which other investors have invested in Verizon. We can see that there are three managers that have Verizon in their portfolio. The Hillman Value Fund has about 2.53% of their portfolio in Verizon. A most recent insider buy was done by the chairman and CEO on January 2022. One of the reasons why Verizon's stock price has trended down recently is because it seems to have lost its mojo. Verizon most recently lost subscribers, and as you know, the telecom business is all about subscriptions. AT&T and T-Mobile, on the other hand, saw a growth in its subscriber base by more than 1 million each, and Verizon, on the other hand, ended up losing more than 20,000 subscribers. So Verizon has been spending more money in technological advancements to get its mojo back. It has been spending more in marketing efforts, and is still certainly one of the three biggest players in the American market. So even though Verizon has lost its competitive advantage with its coverage, it trades at an earnings yield of about 15%, which seems like a bargain. Hey guys, that is all I had for you this week. Hopefully you found this video on Verizon interesting. If you like this content, please do like, share, comment, and subscribe. And if you have any suggestions on which stock I should review next, please leave it in the comment section below. I'll greatly appreciate it. Thank you.